Come on in, guys. If you guys can hear me, make sure you leave me a 1 in the chat. Another morning coffee talk. Another morning coffee talk. Come on in, guys. Make sure I got this one. Let's get you out of the way. Marley is in the house. Good morning. Good morning. Come on in, guys. So grab your coffee. We're going to have a good conversation this morning. I've been doing 3 shows in a matter of 24 hours. A lot of live streaming, guys. Who else is in the house? Let's make sure I see everybody in here that's coming through. Dave Tiles in the house. Mark's in the house as well. Jamarli's content has been stellar, so I had to tap in early. Thank you. I appreciate that, Jamarli. I appreciate you. Let's get this one off the screen. This one's going to distract me. Perfect. Good morning, HEB Sparkling Water. Good morning, good morning, good morning, everyone. Grab your coffee, grab your sparkling water, whatever it is that you're drinking this morning. Let's talk about it this morning, guys. We're going to have a good show. Let me put the title bar up. Let me put the title bar up of what we're going to be talking about today, guys. I hope you have had a good start to your weekend. I was up early this morning at 5 a.m. I couldn't rest last night. Well, I did rest last night. I let rest really good last night, but I woke up because I ate late. You know, after we get off the live stream, I haven't had dinner yet. And, you know, my wife made me a turkey burger without the bread, and I ate some of that Thanksgiving macaroni and cheese. And I woke up this morning, had a little bit of heartburn. I was like, I gotta get up and go for a walk. So I went for a 4-mile walk this morning at 5 a.m. Got myself some Starbucks coffee, and back at it now, guys. We are back at it this morning. I'm hoping you guys are having a fantastic start to your weekend, and I wanted to bring you guys some financial knowledge. A lot of the times on this channel we talk about tech, but there's other areas that we can focus on as well, such as finance. And I have a good brother of ours that's coming to this channel who's reached out to me, and I had an opportunity to meet him and learn about his background. And he's going to be talking to us about the financial industry. First of all, about education and finance. Secondly, we're going to be talking about internships and opportunities in finance that you guys can seek if you're going down the finance journey. And also diversity and inclusion in what companies that he works for are doing to help people in the financial industry. And we're going to have this other financial talk as well too, guys. And I want you guys to be interactive in the chats today. Whatever financial questions that you guys may have, put them in the chat, because we want to talk about that as well. And we'll be doing some Q&A towards the end. So guys, while you are coming in, do me a favor, make sure you hit that like button. Make sure you hit that like button. Obviously this content is good content, and likes are for free. Also, if you want to be part of the exclusive club, join my Patreon. Guys, the Patreon is a fantastic way you can be a part of a community that are with like-minded people who are in tech and other industries as well, or looking to get into tech. And we provide value for each other, right? We help each other out. One of the things is, as a Patreon member, if you're a premium Patreon member, you get direct access to me. And for folks who are part of the community, you get exclusive videos and so forth. So guys, consider being part of the Patreon, a wonderful group of wonderful people. You guys saw the show last night. Brother Rob, Professor, Master IT is part of our Patreon, Brother Jabron and so forth. All these guys are part of the overall Patreon. So consider being part of the Patreon. Guys, I'm going to do this right away. I'm going to introduce our guest, and we're going to jump into this this morning. We got Professor Black Ops in the house. We have Rel in the house. We have Jamarly in the house. We have Mark in the house. We have Dave Towle in the house. We have HEB Sparkling Water in the house as well, guys. I appreciate you guys for rocking with me this morning on this early Saturday morning, getting the information in. So let me do this real fast. I'm going to have my guests, the one and only Mr. Kevin Godin. He is coming to us to give us some game on the financial industry. And guys, get ready to take some notes. That's all I gotta say. Get ready to take some notes. Kevin, how you doing this morning, man? How are you?
I'm doing great. We had a great Thanksgiving. I hope everybody watching had, a good opportunity to spend some time with family and loved ones. And, I'm happy and excited to talk with you today about finance and, the opportunities that, my organization has, and just more broadly, I think it's been a struggle to gain, attract, and keep and retain diverse talent. And I think your industry, not that we're in direct competition, but tech has been drawing a lot of the talent because people see you know the flashy startup kind of numbers that get a lot of attention, and rightfully so. I'll talk a little bit maybe first about my background.
Yes, do that. Introduce yourself. Introduce yourself, Kevin. Give him a
So,
little bit of a background on Kevin.
sure. So I am a fixed income portfolio manager with the Texas Permanent School Fund. That is a fund here in Texas that it's a $42 billion endowment that for the benefit of school children in Texas. We distribute about $309 each year to students that for books and supplies and things like that. And so that's money that doesn't have to come out of um, taxes for residents of Texas. And the idea is, we make a distribution every year to that fund to help fund expenses, but it's all about intergenerational wealth. So that we're distributing enough now to make it fair for all the generations in the future. The idea is that it will go on forever, and we don't take any. It's not like a Harvard University endowment or something like that, where wealthy alumni make contributions every year. This is really it's grown from a $2 million investment in 1845 to over $42 billion today. So, and
Wow.
our hope is to continue to that legacy of growth. And so I work there as a fixed income portfolio manager. But a little bit about my background: I went to Pace University in New York City, which is not what you would call a target school. I know you probably talk to your followers about, there are certain schools, certain programs that get targeted for kind of top tier investment banks or things like that. My career has been kind of, uh, I started off in the back office, worked at a bank, transferred to insurance, was doing operations for an insurance company. Um, uh, I had been pursuing my MBA when I was still living in the city, but when I started working for the insurance company, they wouldn't give me enough money to make sense to do the MBA. It was
Yep.
going to cost me a lot of money out of pocket,
Yep.
but they were, to their credit, pushing the CFA. And if you see behind me, that's my CFA charter back there. Um, Talk a little bit about that process. It's uh, you know in technology, I'm sure you have to do all sorts of certifications, be it for, the Amazon cloud or what
Yep.
have you. There's all sorts of different certifications. So I'm sure you guys are familiar with the idea that it's a self-study process. They suggest 300 hours per um, level. There's three levels. And if you pass all three, then you earn the right to kind of put those letters behind your name and you use that charter holder designation. Um,
So, Kevin, real quick, tell them what CFA actually stands for.
Sure, it's the Chartered Financial Analyst.
Got it.
So it's a mile wide and a mile deep. They really you go into all different aspects. So you learn about accounting. You learn most importantly, and we talked about this before. Even if you don't go all the way through with it, you learn about the time value of money, which I think is a huge thing for regardless of what you do in your life. Knowing to invest and invest early and invest often is going to pay dividends for the rest of your career and the rest of your life. Hopefully, in a long and happy retirement.
I want us to get into that. I want us to unpack that a little bit more too, Kevin. But before we get to the investment piece of it, like, okay, so you went to Pace University. You went to Pace University for your undergrad, and you majored in finance, correct?
I did, yes, finance and business economics. Yeah.
Got it. So guys, we talk about, management information systems a lot on this channel. We talk about, STEM, but finance is considered a math major, right? It's on the business side. You have accounting, you have finance, you have MIS, you have supply chain, you have, all of those specialized business majors are wonderful majors as well too. Kevin chose the path of finance. A lot of people come to this channel. One of my best videos that I created was a financial degree because I rank it up there as being a really good degree to have. But a lot of people have this myth, like Kevin mentioned, that you should only major in finance if you go to, one of the top 10 universities, because that's the only way you're going to be working in Wall Street and getting to investment banking and make the millions of dollars a year. Well, Kevin is saying that's not the case, right? His path wasn't directly on Wall Street, but he's managing, a fund that's, $42 billion $42 billion. That's huge, right? I mean, that's assets, right? So, tell people this, Kevin. I want you to unpack, the finance piece of it. Why did you choose finance versus something like tech?
Well, I mean, it's all about kind of like, I think there's probably some proximity bias to it, right? So I went to Pace University, which is right near Wall Street in downtown New York. So, I mean, you're right. You're kind of near the heart of the financial world. Also, when I started going to college, I wasn't really sure. I knew I wanted to do something in business. I always kind of wanted to be an entrepreneur, but and Pace had an entrepreneurship program. I didn't end up going that route. I got really interested in economics. Supply, demand. Things that government can do to kind of change the economy, whether it's taxing kind of like a bad behavior or something with negative externalities like smoking, or providing subsidies for good behavior. But I started taking finance courses sort of later on in my career, and I decided to double major. And I had always been interested from my first finance course, just the way that stock prices move. There's a paper from Black and Scholes and Merton. I think it's called the reaction of stock prices to news and information. And I just sort of got fascinated by that. I did kind of like an independent study to like repeat their process, but like, in kind of both up and down market cycles. And I like math, and I find that there's so much math to unpack and analyze in financial markets, and the data is good. Like even back then, the data was good, and now, and this ties into tech a little bit. There used to be a website called Quandl. I've dabbled myself in Python. I think now Quandl got bought by CBOE or some exchange, but they still offer just free data, so you can just go on there and get data and start running your own experiments. And I don't know, I've always found that to be really exciting.
I love that. I absolutely love that. So it's almost a combination of, having a love for math, but also being close to an area where, I mean, you're talking about like, the largest financial market in the world, right? You're next to New York City. So of course, that's where you're like, okay, well, I'm going to do something that's meaningful with my life. I'm going into finance. That's where, it's close to, right? So that was a good decision. And talk about this, Kevin, right? So talk about like your path in the financial world. Like when you got out of school, you said you kind of worked for insurance companies and a bank and stuff like that. That's why I think a lot of people, they get they have some concerns about going into finance because if they're not at a top school, what are some of the careers that they can go down, and what was the path that you took to get you all the way up to managing this large portfolio? Talk about that.
Yeah. When I started at the insurance company and I started taking the CFA, what I did was, I worked for several years in operations. I think it was like either 3 or 4 years there. And, that's not a big flashy job, right? But like you can always do your job well and win over people that you work with. So that was a supporting role. I supported several different groups in the organization, and I, forged contacts. And when an opening came up in the private placement team, fixed income team, they thought I was a good fit. And because I was pursuing the CFA, they were like, yeah, let's get you in here. I think this is a good role for you and a place to grow your career. And so from there, from that role, which I absolutely loved, working on deals and learning about different businesses, and getting a input into the investment decision process. I moved down here to Texas with my wife, who's from Texas originally, and I assumed the role of assistant treasurer at a medical malpractice insurer. There it was a much smaller team, but we managed it was like a $1.2 billion portfolio, and we did all sorts of different things. That was probably the most diverse kind of environment I've worked in, because not only are you kind of managing the investment side of the house, but also the asset liability, right? Like when you think about an insurance company, a lot of people don't know this about insurance companies, but basically you collect money from people, invest it, and then you have to pay out those claims later. Most insurance companies write their business at about 100% combined ratio. So they're not really making any money on the insurance business itself. It's all about the investments. So a lot of people are probably surprised to learn that, insurance is a huge industry for investments, because and a lot of great investment people work for insurers. Especially in the fixed income space, because we use bonds to match our liabilities, right? So we have a stream of, potential outflows that we need to kind of plan for today. And from there, to get, personal in my own history, the company that I was working for was getting purchased. And so I kind of realized, that there was going to be a spot for me, but it wasn't going to be doing what I wanted to be doing in treasury. And so I decided it was time to look for something new. And, you talk about personal relationships. A friend of mine at work, in a completely different group, the treasury team was 3 people. He was an underwriter, which is obviously a much larger organization, but his sister actually worked at the Texas Permanent School Fund. So, and she's kind of like one of my, one of my direct colleagues now. So, he was able to put in a good word with his sister, and, that's the kind of thing that really helps, right? Knowing people, having good interactions with people, even if you're not, reporting to them, or, you don't want to do anything really in that organization, just maintaining positive relationships and providing good service to people within the organization, regardless of, thinking about like, can this benefit me? Because it always can.
I love that. I love that. That's a message where I hit a lot on to Kevin on this channel, is that the importance of those relationships, and the importance of having a good brand into the corporate world or whatever world that you're in, because you have no idea who it is that you're going to need one day in life, or who could connect you to another person in life to help you out with this job, and so forth. And it looked like you built a great reputation for yourself. You had a colleague who had a sister that worked for this large fund and was like, hey, you know what? Kevin is a good dude. Hey, you should take at least hear him out for this opportunity. And that's how you got into the Texas fund, right?
Yeah, yeah, absolutely. I
Very
mean, I
good.
like to think that my resume was strong enough, but I would never say that because it's always good to see a friendly face. At that point it was the height of the pandemic, so it was just like this.
Yeah, yeah,
you
yeah,
know,
yeah.
everything's on screen, and it's always good to cultivate positive relationships. So
That's good. That's good. I love that. I love that. So let's talk about a good part of this right here. Let's talk about a good part of this because I want to talk about you said something. You said something investing. We talk about getting to the bag and getting to the bag in my speak, Kevin. If you don't know what it is, because my wife didn't know what that meant a couple of weeks ago, right? Getting to the bag is getting to a high salary, making a lot of money for yourself, being able to invest. All that part is getting to the bag. So let's talk about investing. And something that you said was investing early. Talk about what people should be looking into from an investment standpoint in finance. So this is for the personal stuff, right? This is for, and use some examples of ways that people should be investing their money today and how beneficial it is.
sure, sure. I'll just put a disclaimer here that any views and opinions discussed here are not are mine personally and not of the funds. But I don't think they would disagree with anything that I'm going to say. But early and often, yeah. So while I was at NorCal, I did a study, a simulation of kind of looking at like, all right, well, what if like you had started investing at the peak of the market prior to the great financial crisis, right? And then as opposed to, after, or like towards the bottom, like in March of 2009. And so what I found was that it would have been better, especially with a company match, right? Because a lot of the places that you're going to work for, they're going to have, you can contribute to a 401k, and the company will also match a certain amount that you contribute to that. And then sometimes they'll even have like a 2% kicker on top of that, or some kind of formula.
Yep.
Anyways, so with our formula, I found it was significantly better to have started at the peak because you get that, even though you would have lost 50, I think at the bottom of the market, you probably would have lost 55% on the money that you put in at the peak. Even at the peak, you get that, you get that $2,000 bonus or whatever it was, and you lose 50% on that, but you make more back because you have more money invested at the bottom than if you had just tried to time it. So a lot of people, talk about the equity valuations right now, and we can get into kind of like what that is. Like everybody talks about the price earnings ratio, which is basically the price of the shares divided by the earnings and how high it is, and it is high. It's very high right now, but there are reasons for that, right? Interest rates are extremely low. Earnings are pretty strong, so they've been growing. We've been surprising to the upside for the past 6 quarters, and so there are reasons for that. But my point being is I'm not saying that there won't be a pullback at some point, but from a long-term investor perspective, you're going to get more out of it, and just by keeping that money invested for longer. The other thing that I wanted to bring up on this point is if your company does offer a Roth 401k, I would contribute at least a portion of my retirement savings to that, because as potentially very high earners, you guys are all following Antoine, so I know you're going to be. You don't know what your tax rate is going to be when you plan to retire.
So talk about this, Kevin. I want this because some people don't know the difference, right? To tell people what the 401k is, right, and how companies choose to match, because some people do, right? But we have people who are in college as well, right? So tell people what a 401k is, and then go into, you said, did you say a Raw 401k as well too?
Yes.
Yes. So
Yep.
tell the people the difference between the two, because a lot of companies, my company that I work for, they only offer a 401k and they offer it with a match, right? Tell people
Yep.
what that is and what they should be investing in, and then the difference between a 401k and a Raw 401 as well.
Yeah, so a 401k is a tax advantaged retirement savings account. And so that takes out pre tax dollars from your paycheck. So it lowers your current tax bill. So it essentially kind of makes it less painful, right? Because you're lowering your tax bill now and you're putting dollars aside. Now, those dollars that you put in there are allowed to grow tax free for until you take it out without penalty, which I think the age is like 64 and a half, or I'm not a what is it, CPA. I'm not an accountant guy, so I'm not 100% sure. It's a long way off for me personally. Um, but a Roth is putting, and you're absolutely right. It's less common, but if your company does offer it, I would contribute to a Roth 401k because that's after tax dollars there that are taxed before it goes into the account, but then are tax free on when it comes out.
Yes. Yeah. So guys, let me explain this as well too. So, let's just say you make $100,000 a year, right? And you contribute 20,000 to your 401k. What you're going to be taxed on with a regular 401k is $80,000, right? Because that $20,000 went into your 401k, it isn't taxed. However, as that $20,000 grow, when you're come time to retirement, if obviously you allow that to sit for over the years and continue to invest and invest and invest and invest, when you are ready to retire and you're ready to start using that money, you're going to get taxed at the rate that the rates are in the U.S. at that point in time, right? So, versus a raw 401, right? You are taxed by putting the money into it, but when you go to collect it, you're not taxed then. So that's the difference. One is, pre-tax. One is, post when you withdraw, right? You're taxed at the back end. A lot of people say that the Roth is actually better because, you don't know what the interest rate, you don't know what the tax rate is going to be when you retire, right? That could be 15%, could be 30%, could be 35%, depending on how much of an earning or how big of an earner you are, right? So I love that you talked about that. So two great investment vehicles. Yes, your 401k, because here's the thing. If you're not investing in your 401k, you are shooting yourself in the foot, because a lot of companies, they actually match the dollars that you put in there, dollar for dollar, a lot of the times, right? And some of them even go above with that. If you have an opportunity to invest in a raw 401k, if your company offers that, Kevin is saying you should be doing that as well too, and he's explained the exact reasons why. What are some other investment vehicles people should be looking into as well too, Kevin?
Well, I mean, it all depends on kind of like what your risk tolerance is, right? I mean, I'm not a financial planner, but you know, typically, right, over the long term, equity has been a phenomenal, you know, growth instrument, and the younger you are, kind of the more equity exposure you want to have, and then as you get closer to retirement, like you should shift more into fixed income. Right now, I mean, I think given that we're assuming that rate interest rates will probably start going up over the next year and a half. Fixed income is going to be a tough place to be. If for those not familiar, fixed income is bonds that pay a certain coupon every 6 months, or it depends. Some different types of assets pay monthly, but they pay a fixed kind of coupon rate. And if you issued a bond when interest rates were at 1% and now interest rates are at 2%, well, the value of that bond has gone down. And to get technical, you can approximate that change by the bond's duration, which I don't want to go down a finance math hole here, but
No.
but
Yes,
it's going to be painful.
even for this, Kevin, right? So, being a person who has an MBA, and a lot of people, understand what bonds are, but explain at its basic level what a bond is as well too, and why that's a fixed asset.
Sure. It's basically an IOU. So I help to manage the corporate portion of the fixed income portfolio at the PSF. So I basically, like IBM issues a bond. We take a look at that bond, say, oh, we think this is a good fit for us, and we buy it. That bond is basically a guarantee that IBM is going to pay us if it's $1,000 face bond, right? And it's uh, you know a 1% coupon, we'll get $50 every year,
Mm, mm,
or
mm.
every 6 months, right?
Yep, yep, yep.
Sorry,
So,
that's sorry. Sorry, if we own 10,000, it would be $5, $5 each,
right,
twice a year.
right,
So
right.
$10 a year,
So, so,
and then
so,
at the end we get that maturity back. So if it's a 10-year bond, we get that $5 every year, and then at the end of that we get our $10,000 back.
right, right, right. So, guys, at its basic level is basically an IOU. A company issues bonds that you can buy, so that you can leverage that money for whatever it is. Could be capital, whatever it is that they use that for, and they pay you a fee every 6 months, and at the end of that bond, when it's done, or I don't know what the actual term is, when it's complete,
Mature.
maturity, you get your $10,000 back, right? Plus whatever else that the what is the coupon, right? On top of that, they owe you on top of that, right? So it's a way that you can collect money. And I don't want to say it's passive. It's somewhat passive income, isn't it? It's like a passive return.
Yeah. Yes.
Good, good,
It
good.
it is. It absolutely is. So, I mean, if you buy a bond and hold it to maturity, that is passive income.
Yeah.
From our perspective, right, we would be doing credit research on that bond the whole time and see if it's trading cheap or expensive to its peers, and then trying to earn a profit if we can, and trade into something that's trading cheaper. But yes, at its core, it should be, from an individual's perspective, you buy it, kind of, forget about it, and then it just gives you passive income. But for most of the folks watching this channel, fixed income is not exciting, and I wouldn't be adding a ton of it to your portfolio. I know you had mentioned real estate, and being involved in that, Antoine. I think that's if you have the means to do that, I think it's a great investment. My father has been in the real estate business, and it's worked out great for him.
Yes, yes, that's another investment vehicle, guys. So we hit on two wins for you. 401ks, Roth 401s, right? And I'll talk about the real estate as well too, because I started my real estate investment journey in 2018 with just a single family home, right? Bought it for $48,000. Now it's probably worth maybe $100,000 now, right? And I my mortgage on that place is like $242 a month, and I rent it out for $1,100 a month, right? So it's passive income, right? It's cash flowing, but also I'm gaining equity with it going up in value as well too, right? So another investment vehicle that you can consider as well too. But in order for you to do these things, you got to have, you got to get to the bag. You got to invest. You got to, you have to have a degree that's worth it as well. And Kevin mentioned finance. I mentioned MIS, right? There's accounting. Pocket Watching with JT talks about accounting. PBO is computer science, right? You have to have a good education that's going to allow for you to get a good job in order for you to make a good salary, in order for you to do these kind of things and so forth. Talk about this. Are there any other investment vehicles? You mentioned, what about a Roth IRA, Kevin? How about that?
Yeah. So the Hartford was the only employer. The large insurance company I worked for several years ago was the only place that offered the Roth. So I did it while I was there, and then when I left, I put both my 401k and my regular for or my regular 401k and my Roth 401k. I rolled into an IRA.
Yeah.
So absolutely, you can continue to contribute to your up to a certain limit in your Roth IRA. I was doing the Roth 401k because there was a match there, but once if that's not a possibility for you, you can absolutely do your own Roth account and
Yeah.
an investment retirement account.
I think the contributions, the max contributions you can do in a year in a Roth IRA is $5,000 a year, I believe. Somebody
Yeah,
can quote me on that one, but I believe that's what it is. And another investment vehicle for you as well too. But I think the safe bets that I do is 401k specifically, as well as real estate, huge ones. And I'm into the cryptocurrencies and things like that, and we'll get your point of view on that sort of stuff too. But Kevin, talk about or talk about the why is important, right? Like why investing early is important. Talk about the compounding of investing early.
yeah, absolutely. So it's an important concept, the time value of money, and it's easy to do on your calculator, right? Say assume you're going to earn, let's call it 8%, right? So the way to kind of get at your end value of like putting that money away for 34 years is you put like 1.08, raise that number to 40 years or whatever, right? And like that's what you should get at the end of that. And just do it, just practice, just type it in your calculator right now, and it's incredible. um, if you can compound the money that even if you're putting $5,000 away this year, try and up it to 6,000 next year, whatever you can do, that the more money that you have in that account then grows the next the over the cycle. you know that return is going to be over a 25-year period, and it's a snowball effect.
Mm,
And so the bigger that your pot of money is, the bigger it's going to get.
mm,
And so the sooner you can get that pot of money to a substantial amount, call it, and set a goal for yourself too, right? Like, say in the first 10 years of my career, I want to have, $150,000 in this account, right? Well, now you're going to work for another 30 years. At the end of that 30 years, if you're getting 8% on that $150,000, you're going to be talking about a large sum of money that's going to be, help you live a life that's, comfortable, and, and be able to help, support, folks around you as well.
mm, I love that. I absolutely love that. Yes. So investing early is wonderful. And talk about this, Kevin. Right? Like you manage portfolios. You know, what are let's just say somebody's is behind. Right? They're 30, and for whatever reason they didn't take the investment part serious. Maybe they were looking at this as more saving and so forth. Talk about what are some of the ways that people could potentially catch up on investing, or do you have a point of view on ways that they can actually catch up?
Well, I mean, if you have the means to, there are catch up contributions that I think allowed. I don't know if it's for the Roth 401k, but I know for a regular 401k or an IRA, I think you can. There's a time period where you can kind of contribute. You can also, just if you're behind on investing, you can invest in a taxable account as well. I mean, I think that should be kind of like a. Uh, I wouldn't suggest that would be the best thing to do. Now, if you want to invest on your own, aside and above what you're doing for your retirement, I wouldn't, go, I would say go for it. If you have money that you don't need to spend right now and you've maxed out your, and you've kind of at least met your match, I always say, you always want to contribute to the match. There's really no reason you shouldn't be contributing to the match, because you're getting to, as Antoine said, you're getting that dollar for dollar back, and that's free money.
Yep.
And the company would love to not give you that free money, but that's your money, so get it.
Yes, yes. A lot of them don't want to pay that, but it's important to invest at the max, and I try to do it at least at the beginning of every single year, right? With a nice little bonus or something like that. It's like, you know what, I'm going to put that 19,000 over there, whatever it is. Don't have to worry about it anymore. Yeah.
Yeah. But above and beyond that, if you want to invest in a taxable account, for your own kind of benefit, I don't see anything wrong with that. Me personally, we have to, we have a lot of compliance restrictions at the fund. I typically, use index ETFs and that type of thing in my personal accounts. I have some companies that I have high conviction in that I buy, but we have to pre-clear trades, so it's kind of a pain.
Yep.
Sometimes.
So let's talk about this, Kevin. Let's do a switch topic real quick, right? Let's talk about internships. Let's talk about internships, because you work for a fund that's $42 billion, right? You have somebody who's watching this show today, and they're like, all right, well, maybe I don't want to do tech. Maybe I want to do finance because I can make a whole bunch of money. I can help companies make a whole bunch of money. I can help my family make a whole bunch of money. What are some opportunities for people who are looking to get into finance that are available out there? And talk about, some of the internships that you are, looking to or have created and you're looking for people in.
Yeah, absolutely. Thank you for touching on this. We have a great opportunity at the Texas Permanent School Fund for a summer internship next summer. It's a 10-week program, working up to 40 hours per week, and it's paid. This is the best part: $4,300 a month. And so,
that's money.
So
right
you're
there.
going to be you're going to be working with great people. You're going to get experience in public equities, real estate, private equity, hedge funds, fixed income, investment operations, and finance. So you're going to get a rotation through all the major asset classes, finance and operations. And I think it's a great opportunity, and it's paid. I mean, $4,300 is a lot of money. When I was an intern, I think I made $13 an hour, and I don't recall what that adds up to, but I'll tell you, it was nowhere near $4,300 a month.
I can tell you this: when I did my internship, I had to do it for free.
Yeah, I know. I was happy to, believe me, I was happy to get a paid internship, because most of them were free at that time. I mean, it was.
That's how it was.
It's changed so much now, Antoine. I'm not going to guess what year you graduated college, but I graduated in 2006, and back then an intern was basically like, I was doing filing. I was maybe like looking through spreadsheets, trying to find, misplaced digits. I mean, it's really, they've done a great job with the program at the PSF. We're trying to show interns what the industry is about. It's more structured towards a good experience and a learning experience for the kids than it is like, you're not going to be getting people coffee, especially now in a virtual world. I mean, so I think, all the projects that we have the interns work on are, vetted, and, you have to make a good case about how this is going to, improve the interns' understanding and get them exposure. So I really think it's a great opportunity, and it's one of the reasons why I'm so happy that you let me share your platform today.
Yes. So guys, right? And Kevin, I'll answer that question. I graduated undergrad 2005, so I was just before you in December 2005. So we're around the same age. Okay. We're millennials. We're the oldest of the millennials, though.
Yeah.
we're close to the Gen X, but
Yeah.
we're millennials. So, and we graduated during a time where the job market, it was, if you didn't have a job, if you didn't get an internship, you more than likely wasn't going to get a job, because 2 years after we had the crisis, right? And a lot of
Yeah.
people got hit during that time. So I was lucky. I wasn't impacted by it at all. I'm assuming, were you impacted by it? Kevin?
I wasn't, but I'll tell you a great story. So I started at the Hartford on September 15th, 2008. And for anybody that knows anything about finance, that date is significant because it was the Monday after Lehman went under. So I mean, it was a roller coaster. Believe me, I was like, I hope it's not the last guy in, first guy out, because I'll see you later. Um, it didn't work out that way for me. But I will mention this, guys. There's been a lot of studies over like what kind of makes the biggest difference on lifetime earnings. And one of the key things is it a good environment that you're being hired into? And I think
Mm,
there's a skills gap right now for all the folks that are listening that are in school right now. This is a awesome opportunity for you guys to get hired. And people, companies are having to pay more money to students, and that is going to affect your lifetime's earnings, right? Because like you're not going to take a position unless things get really bad where you're getting paid less money.
mm,
So it's like where you start does matter over a lifetime, and it's going to have a pretty significant impact. And so I'll reiterate the fact that there's no excuse that if you're graduating college right now that you shouldn't be hitting that match on your 401k. Please
mm,
hit that match.
I love that. I love that. I say this all the time. I use this analogy a lot in some of my videos. Is, your start is important, right? And you want to come out of the blocks fast, right? We had the Olympics, right? And I always think about like the sprint, getting a good major, if you're going to go to school route, is important. And if you're majoring in things like accounting, finance, MIS, some of the stems, it's like coming out of blocks fast. And investing into your 401k and matching that every single year is coming out of the blocks fast, right? Doing an internship, paid internships, right? It's going to give you the skills that you need to where when you're going to enter the workforce as a full-time employee, you're going to have the skills that you need, and you're not going to accept a job that's going to be paying you entry level at like $30,000 because your skills are up here. It's another coming out of the blocks fast. I love that. Let's dive a little bit deeper into the internship. A couple of questions I have on this one. So 10 weeks, 4,300 a month. So that's over $8,000, right? Over $8,000 that you get paid for 10 weeks. Does the person have to be remote? Or does the person have to live in Texas? Can the person be remote? Where would you like candidates that are looking to get into finance? Do they have to be in the state of Texas? Because that's where you and I are. We're down the street from each other.
Yep.
Or do they have to, or can they be anywhere within the United States?
My understanding on this, and it's not the first time I've gotten that question, is that it is preferred that the applicants be in the state of Texas.
Yeah.
Now, I believe that's an organizational, like, so the Permanent School Fund sits under the Texas Education Agency, and I believe that that's their hiring standard right now, is that not that you have to be in Austin necessarily, but within the state of Texas, I believe is that said, I wouldn't discourage anyone from applying. Who knows? Things can change.
Yeah, 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 yeah. I think that's good. But here's the thing: a lot of people from this channel watch from Texas, Houston, Dallas, right? So
Perfect.
so
All apply. Those
yes.
are all good. Apply.
So talk about this now, Kevin. Let's switch topics from the internship, and I'll make sure I do this, guys. I'll make sure I'll do this because some of you guys have nieces, nephews, or you may be in college yourself, right? I'll make sure that I get the link to where they can apply into the description of this video as well to be able to share that with the audience. And I'll get that from you, Kevin, and after we finish this session. But talk about this, right? One of the things that you do, you sit on the board of diversity and inclusion for this $42 billion fund. What is the plan by sitting on this board of diversity and inclusion? What are companies like, the Texas Fund, right? The Texas Tea Fund. What are they looking to do with candidates regarding diversity and inclusion?
Right. So I mean, it's a rather new board committee within the board within the permanent school fund, and we haven't laid out our mission statement yet. We're in the process. That's hopefully something that we're going to have by the kind of beginning of next year. But kind of what you know what I think our goal is to increase the number of diverse individuals within the fund, and not just increase the number generally, but also find ways to promote them to leadership positions, and and make sure that we're retaining that talent. And I mentioned this to you. I had originally seen it in the Robert Toigo Foundation did a piece with Pension and Investments that referenced an older McKinsey report, and the fact is that companies with diverse leadership do better. They have better financial results. So I mean, as the ESG stuff aside, environmental and social governance stuff aside, it just makes sense to have a more diverse workforce, because you're getting less groupthink, right? Like if we all went to the same university and we all play at the same golf club and we all listen to the same radio show, we're all going to have a similar point of view. And the idea, what I think drives better outcomes is, getting people with diverse backgrounds in a room together. You're going to get to a better answer because you'll be looking at it from as many angles as possible. And so I think our early goal is to, one, not a lot of people know about the fund. So me coming on here today is a big deal because, at least your followers are going to know about the fund. We're kind of like, we kind of fly under the radar, and, we don't want to. We want to, we're proud of the work that we do, and we want people to want to work for us, and, continue to grow the fund and be a benefit to the students and citizens of Texas. And so trying to build our brand and attract a diverse and talented workforce. And if we have to fight tech and the Elon Musks of the world to do it, all right. Well,
Yeah, I think a lot of the times tech, is where people have their head at, and which we talk about a lot on this channel too, which I want you to get into, Kevin. This your point of view, right? And guys, yes, it's the Texas Permanent School Fund. I keep mispronouncing it, but it is the Texas Permanent School Fund, the largest fund in Texas, at least of this kind. Kevin, helped manage it's $42 billion. It's magnificent. It's huge, and so forth. But what's your point of view on things like, fintech, and the way how the finance and tech industry are merging a lot of the times, and so forth. Give us your point of view there.
yeah, I mean, I think, it's difficult to say where things are going to land, but I mean, you've been seeing it with, the large, JP Morgan, Goldman Sachs. They're all hiring technology people, and whether it's to get into cryptocurrency, or whether it's to explore kind of like smart contracts, and like how they can better settle, kind of esoteric, whether it's bank loans, which are just a nightmare to settle, or, there's all sorts of different asset classes that don't settle easily through the kind of plumbing of the financial system, which is I don't know, it's basically most public equities and bonds and things trade, and they all clear through the Depository Trust Corporation. So things that are outside of that, there's a huge sphere of assets that are less liquid that take time to settle. You have to have signatures from people and that kind of thing. And so there's a huge push to try and streamline that by using technology. Cryptocurrency, I mean, I think, listen, if you're young and you've got a better view on it than I do, put some money into cryptocurrency, because it'll probably be end up paying off for you in the short term. I mean, me personally, it's a little bit risky I'm a fixed income background, so equity is probably about as risky as I like to get. But I don't think that the technology is amazing, and there's definitely value to it.
I love that. I love that. I don't know if you keep up with the news. Well, I know you watch the news, so take us through like your morning when Kevin gets up, he turns on his TV. What is he watching?
Normally I live in the Bloomberg terminal, so I mean I'm watching headlines kind of throughout the day. What is the Fed doing? If there are Fed speakers, are they sounding more hawkish, more dovish? How has interest rates, the curve changed overnight? So that basically, U.S. Treasury rates is from 3 months to 30 years, and so where you're at along that curve impacts our portfolio on a daily basis. I'm paying attention to companies that report early, whether it's like Nike or FedEx, trying to see if their supply chain story is easing or getting worse, how that's going to impact companies' margins going forward. I'm a corporate credit analyst, so I have my portfolio up and I'm looking at like who's reporting, where the bonds are trading, looking for ideas.
Good. Continue.
I used to watch CNBC a lot in the mornings. I know a lot of people do. I just for me, I've got a bunch of different screens set up over here, and I'm doing my work on on one screen, and then I've got kind of like watching for headlines on the other. So
good stuff. And obviously one of the biggest things that came out most recently is the inflation, right?
Yeah.
What do you see with the government pumping trillions of dollars into the economy because the pandemic, right? Good thing, bad thing, overspending. Give us your point of view on that piece of it with how it is impacting inflation.
Yeah, I think it's a great question. So, the government has put lots of money into people's pockets, and rightfully so. I mean, because they mandated a basic shutdown, so lots of people's livelihoods were cut basically off, and so they tried to fill that gap. They tried to fill that gap by providing longer unemployment benefits, which I believe those have recently run out. Increased unemployment benefits, which have recently run out. And so there is a lot of money that was pumped into the system. Now, a lot of that money got saved, right? Because a lot of that money people didn't really need it because a lot of the economy wasn't impacted, right? So you've got the service sector, which was impacted really, really negatively, and they got money. And so they've probably been spending that money to make it by. And then you've got people like me that basically used to work in an office. Now we work from home, and absolutely nothing's changed. It's our paycheck's still coming. And so this money that's come in is extra money. Well, so what you're seeing is now people are realizing that, like, hey, there's no we don't have to save all this money. So you're seeing a lot of people spend money on things, and try and like try and buy. Like me personally, I've been trying to buy a mountain bike for a while, and it's like the mountain bike I want is never in stock anywhere, and I'm not going to pay more for it from somebody who's rode it a couple times. It just doesn't make sense to me. So I'm just going to wait. I'm personally, that's kind of where I'm at. I'm done kind of paying pandemic prices for things that I don't, necessarily need. I think there will be a day when those supply chains ease. From a inflation, from like a long-term inflation standpoint, the Fed is likely to, right now they're tapering their asset purchases, so they'll probably taper that down to nothing by, I think it's June of 22. At which point, the market consensus is right. Well, they'll start raising interest rates right after that. So interest rates are going to be going up, which is going to tamp. That is a way that the Fed tries to tamp down inflation.
Exactly.
So over the long term, inflation should ease, both for supply chains kind of self-correcting themselves, and then the Fed raising interest rates. So do I think that we can see another surprising print over the next, call it 5-6 months? Yeah, I think inflation could probably continue to hurt. I think the good thing from a from a perspective of somebody who's graduating now or is even gainfully employed now is that wages should inflate as well, right? So there's a chance that the price that you're going to pay at the grocery store goes up, but there's also a good chance that you might receive a larger than expected increase in your pay this year. So hopefully those things begin to offset and don't impact people in a very negative way. And then as interest rates begin to increase, that it costs more money for folks, for companies to borrow. It costs more money for people to borrow money, so that should slow down the growth of the economy. And that's kind of the lever that the Fed is going to be pulling.
Yeah. And you see them pulling that sometime next year, in 2022, you think?
Yeah, so I think the market is pricing in somewhere between 2 and 3 rate hikes in 2022. So that would be, right now, the target range is 0 to 25 basis points. And so, the end of the year, I think, is projected to be, 75 to 100 basis points Fed funds rate. And so now what that does to the Treasury curve, they control the Fed funds rate. They don't control the long end of the curve that's kind of like set by market participants. I think what tamps that down a little bit is still, our interest rates look pretty good from a foreign perspective. So we're at, we're kind of like range bound, like 145 to 170 on the 10-year right now. And that probably, we're kind of approaching the higher end of that over the past week. That, I don't want to, this is entirely my own opinion. I think, that, maybe goes to 225 in the next year.
Yeah.
I don't think we'll see kind of like a 3% breakout.
Yeah. Well, I would say this, right? So, that's foreign money, right? That's foreign investments. But what's your take on, with interest rates still being so low, one of the things that we talked about as vehicles was 401ks, Roth 401s, and, real estate, which I'm in. I haven't stopped my real estate investment. Matter of fact, I invested in 2 properties this year, 3 actually, in 2021. For somebody who has the cash and are looking to get into real estate, do you think it's still a good opportunity to get into it, with the low interest rates?
Personal or
Personal.
for investment purposes?
Well, investment purposes. Let's go there because I do it for investment purposes myself. Yeah.
Okay. Yeah, I think if you can take advantage of the rates and just realize that I think on the horizon, there's a time when interest rates start to rise and make affordability lower, right? Because people buy houses based on what they can afford on a monthly basis, not so much on a dollar value, right? So even if somebody's buying like, $1 million house, maybe that's, I don't know, call it 5 or 6 thousand. I'm not sure what that number works out to, but $5 or $6,000 a month. So they're going to be purchasing. So I think there's a lot of markets, Austin included, um, where interest rates will impact pricing because people are not buying properties for cash. They're taking out mortgages on them, and as interest rates increase, that monthly payment gets more expensive, and so you'll see a depression in not a depression, but a easing off the gas of price advances. And I think it's very market specific. So I would hate to. I mean, in Austin, we've seen a huge inflow from folks from California. I myself am a transplant, so there's a lot of people moving here because it's the weather. It's beautiful, hill country, the lakes. You name it. But I think that there will be pressure on housing prices as interest rates increase, for sure.
Good. I love that answer. All right, I think we've touched on a lot of the topics. I'm gonna go here and check on the chat real quick and see. Okay, we got a super chat from HEB Sparkling Water. He says, time to take some notes. Thank you so much, HEB Sparkling Water, for the $10 super chat with No Limit 3. Hey, Black Heights, have you read the book Verbal Advantage or Never Eat Alone? No, No Limit 3. I haven't read either of those books. It sounds like you're suggesting them, so I'll have to look into them. Kevin, have you read any of those? Verbal Advantage or Never Eat Alone?
No, I have not, but those both sound like good reads.
Yeah, I'll check them out. I'll Google them. No Limit. Thank you for sharing that as well. Ashton with another super chat, $10. Learning a lot this morning. Thanks, fellas. I appreciate that. Let's see if there's any questions in here. I graduated from the University of La Verna, small school in Southern California. Great show. I was wondering, what is your name for the host, Black Ice? His name is Kevin. Kevin Godin. It should be on the screen, I believe, as well, too. Let's do this. Cisco V, good morning. Very informative show. Good topic. Roll that 401k. Adrian Nass says, compounding, time value of money. Absolutely. Brother Billy Rose in the house says, important conversation. Good morning, all. Yes. Catch up contributions indeed. I'm interested in this internship, Adrian. Absolutely. Permanent school fund. Yes, that's right. What I'll do, I'll make sure that I get the link and so forth so I can put it into this video so anybody who comes across it can reach out or can to apply to it. First row, diversity, equity, and inclusion is critical to the finance space. Kudos to you, Kevin, for taking an active role in this initiative. Awesome. Listen, brother Billy, Kevin, he's saying kudos to you for taking an active role into this and DEI. Kevin, are you on LinkedIn? Yes, he is. Absolutely. He's on there. Adrian Nash says, the wise person seeks a multitude of counsel. Yes, please limit that group thing. Absolutely. That's wonderful, Adrian. Professor Black Ops says, Q with the digital currencies take the power from the Fed in the future. Okay, it looks like, guys, we've went through a lot of the questions on here as well too, guys. If Kevin, I don't want to take any more of your time. I'm assuming you got to go and do some rest of the stuff with the family. Anything you want to leave the audience with, sir, before I let you cut out of here, man?
No, I'd just like to reiterate my thanks to you, Antoine, for loaning your platform. I hope this has been helpful for your audience. Please, give, I'll send the internship, and you have my contact details. If anybody is interested, wants to talk about this, I'm happy to, meet one-on-one. And, this has really been a great opportunity for me to talk about the fund and have a great conversation with you. You're so easy to talk to. This was really a pleasure.
I appreciate you, Kevin. Thank you so much for coming on the platform and sharing this information, right? I like to have, diversity when I talk to the group as well, too. Last night, we talked about tech. And we talked about building good character and being a husband and all this other stuff. And we didn't get into this as, coffee talk, but these are some of the conversations we could talk about as well too, right? So you're invited to the platform at any point in time. I know you're a husband and a father as well too. Matter of fact, that's how we met. We met through our wives before, and you reached out to me through your wives. That's it. That was, that's how, men like us meet each other. And we connected over coffee and stuff like that. And this was like, 2 to 3 weeks ago, guys. So, it's important to build a strong network. Kevin is part of that network. And obviously you can tell he has a lot of value, right? And, obviously is in the market to help as well too, by providing internships and so forth. So we champion guys like Kevin and always welcome him back to the platform as well too. So Kevin, I appreciate you, sir. You go and have a good rest of your day, and we'll catch up soon, man. Thank you so much for coming on, brother.
Thanks again, man. Talk to you soon.
Thank you, Kevin. Appreciate it, man. Guys, I hope you guys enjoyed the show today. I hope you guys enjoyed the show. Enjoy the rest of your weekend. I'm going to be doing a Patreon show on tomorrow for the exclusive Patreon members. Guys, if you haven't become a part of the Patreon, jump on in. Also, don't forget to hit that like button on this video. Valuable content that I like to share with the audience here. And I hope you guys found it to be, helpful and useful. What I'll do is I'll get the information from Kevin about the fund, the permanent school fund, so you guys can read up more about it. I had an opportunity to dive into it when I first met Kevin. Massive fund that does a lot of investments and does really well for the state of Texas, but the internship opportunity as well too. If you have a niece, nephew, cousin, or if yourself are interested in going to finance and learning more about, equity markets and so forth, this is a great opportunity for you for a summer internship, paid internship. And the person who's, hiring, right? Now you had an opportunity to experience, right? You can say, hey, I came through, I'm interested into this internship and I saw you on Antoine's show, or I'm looking to be a part of this through Antoine's show, right? So providing that level of exposure as well too. Guys, enjoy the rest of your weekend. Enjoy the rest of your weekend. And until next time, y'all. Peace. SOBC, I appreciate the super chat, brother. Casual economist, I appreciate you. Engineer cannabis, Mr. Ware, you need to get interview AI guy that know AI in the healthcare and finances. Okay, I'll do that, brother. I'll do that. Billy Rose says another great interview, Mr. Wade. I appreciate you, brother. Dave Tile said best show on YouTube. Thank you, Dave. I appreciate you guys. SOBC with the super chat. I will be watching this on replay. Keep up the great work. Thank you. We're going to be talking tomorrow, Kate. We're going to be talking tomorrow, Kevin, brother. I appreciate you. First row, great answers on the real estate investments are spot on. Low rates, improved cash flow. For personal purposes, increase